Awesome. So, guys, welcome back to another episode of All About Markets, our Twitter Spaces series, where we host some of the top market voices and discuss and try and break down the market that is madness. This is the first one of the new year, 2023. So, really excited for it. And we've got a very special guest with us, Amrish Baliga. Amrish, for those who don't know, has a very rich experience in the markets over 25 years. He's worked with several top-notch groups such as Kotak, Kavi, and Edelweiss in the past. A regular at some of the top business news channels and is always known for his out-of-the-box contrarian calls. Amrish, welcome to the spaces.
Thanks, Yash, for having me on your show, and wishing all of you a very happy new year, healthy and a prosperous one too. Because I think 2023 is going to be a slightly difficult year to make money as compared to the last 2 to 3 years. And one small correction. In fact, I've been in the markets now for this will be my 40th year. I started in '83.
Oh, okay. I'll just make
Yeah,
that
it's
change
been
in
a
the bio, I
it's
think.
been a long years. Right. I know. I can understand that. Because I started investing
Got it.
right into my college. Yeah,
Hmm.
in the first year of my college, I started investing.
Wow, that's insane. We keep hearing all the time, when people say that, start investing early, start investing early. You make a very good example or a case study for it.
Yeah, and especially in those days, you could hardly hear anyone investing in the stock markets, and especially, I mean, where I was. In fact, I was in Calcutta. Although we had this equity cult in Calcutta, but it was in a very close sort of a circle because Calcutta was the only other market. I mean, the other big market. I mean, if you compare with Bombay, Bombay was the largest anyways, always.
Yeah,
But Calcutta, also saw a lot of action in those days.
true. So, Amrish, let's take this conversation forward. You did mention, in the start that 2023 will be a challenging year for Indian markets. Uh, can you explain more as to why do you think that is the case? And while you do explain that, just one more small point that a lot of experts, while they believe 2023 will be a challenging year, uh, do have this thing at the back of their analysis that second half of the year could be better. So are you also of the similar opinion, or do you think that the whole of 2023 will be
No, I'm also of the opinion that the second half will be much better, and possibly we could close in the positive. But then, people should not, panic with whatever could happen in the first half. And again, this is my view. You never know whether it really happen or not because everyone takes a view and then one builds a strategy based on that. And my view is that the first half, we'll be seeing several headwinds. The rate hikes will continue. I think we'll know later tonight when we have the FOMC minutes.
yeah.
But then expected that the rate hikes will continue at least for the next 2 quarters. India also, we could see possibly another 50 or 75 basis points more. Uh, and then again, we have seen those COVID fears, although they have ebbed a bit right now as compared to what we saw in December last week. But you never know. As and when the
Hmm.
COVID fears again come up, that is, always at the back of the mind. And more importantly, I think the global slowdown, which we were talking of in last year, could be a reality this year, especially in the first half. Although, there are economists who say that this global slowdown may be for a much shorter period than earlier envisaged, but nonetheless will have a slowdown, and which in fact could turn into a recession, possibly in US and Europe. We don't we hope it doesn't, but that's the expectation as of now. And when all this is happening, we cannot remain isolated for too long because
Hmm.
here we may not have a major slowdown, but we may not grow as fast as we were expecting earlier. So that will affect us to a certain extent. And we should remember that we had outperformed in the last, especially last 6 8 months, we had outperformed most of the other markets. So somewhere we have become slightly expensive,
Hmm.
and I mean, again, I mean, if I go back to the FMC minutes, in case we see that there'll be a stoppage of rate hikes, typically we have seen in the past that whenever such thing happens, you have the US markets rallying. Now, if the US markets rally because of this, uh, then it's not necessary that India will rally behind it. Sentimentally, it could be positive, but then where, I mean, if you're talking of the FIIs, as to why should they invest in India where it's already expensive? I mean, they would prefer to invest back in US where the markets had cracked a lot, and the upside could be much more than what we could see in India. And on the other side, if the I mean the rate hikes are indicated to continue, anyway it's negative. So both ways, it is
Hmm.
negative for us. Yeah. So the first half could be a bit difficult, but I mean from the second half onwards, possibly because I mean we are expected to outperform. I'm talking of the economy, not the markets.
Right.
Because we are expected to outperform the rest of the global, the other countries. So I think that should play out in the second half. And typically, what happens is whenever a economy outperforms,
Hmm.
uh, the liquidity finds its way to those markets, and that's what exactly we should see in the second half. And by that time, I'm expecting that we will have the Q1 FY24 earnings, which should start showing some uptick. Because the next two quarters, in the sense Q3, which should be out in the next few days, and Q4, could be no different than what we have seen in Q2, where we have seen mixed sort of earnings. And there'll be, I don't think there'll be too many surprises on the positive side. So already looking at the expensive valuations, there'll be nothing more to look forward to.
Got it. Amrish, just one more point to add to what you said about, when things start looking better, perhaps the flows might shift towards markets like US or China. In that case, do you think that for a second year running, the domestic investors will be able to soften the blow, or keep the markets afloat? I mean, obviously, the runway
uh,
for retail investing is huge, but do you think for a second straight year
that's
we'll
true.
be able to do it?
No, see, when we talk of domestic investors, we have to understand that domestic investors invest in two, three different ways. One is direct investment into the markets.
Hmm.
Second is direct investment into mutual funds. When I say direct, I'm talking of lump sum investment into mutual funds.
Right.
And the third is SIP into mutual funds. Now, when the markets are doing well and in upward momentum, the first two happen automatically. In the sense, people invest directly in the market because they are making money. They see the mutual funds also performing, so they also invest through mutual funds because their advisors, brokers, everyone pushes them to invest through mutual funds for whatever reason. And the SIPs anyway keep going up.
Hmm. Amrish, am I am I the only one who can't hear you? I think you may have dropped off. Amrish, can I quickly get a mic check? I guess there seems to be some issue with Amrish's connection. If you can hear us, Amrish, uh, can you please try and reconnect, and we'll add you back in. Okay, you're back.
Yeah, I don't
Amrish,
know
can
where.
you say something?
Yeah, can you hear me now?
Yes,
Yeah,
yes.
yeah. So what I was saying was that unless the markets do well, you won't have too much of fresh retail money coming in directly
Hmm.
or through mutual funds through lump sum investment. But the SIPs, I think, will continue. And the quantum of funds which are getting into mutual funds through the SIP route itself is good enough to take care of a lack of FI investment or even FI selling. But I mean, that's exactly what we have seen in the past 1.5 years. That whatever FIs are selling was clearly getting absorbed
Yeah.
because of the flows to the mutual funds. Yeah.
Hmm.
So to answer your question, I think the retail money through SIPs will anyway continue.
Okay. So retail participation, you do not expect at least the retail participation to mellow.
Like I said, the direct investment could come down because if you're losing money or you're not really making money in the markets, then the retail investors tend to withdraw. Because typically the psychology of a retail investor is if you're losing, you don't sell unless you're forced to sell. Because I mean, if you have an F&O
Right.
position, you'll sell. But if you have a delivery position, you tend to hold on. But then you don't invest fresh. And
Hmm.
typically, when that stock or that basket of stocks go back to the cost price, you tend to sell off. That's the psychology of a retail investor. They keep putting in more money only when there's a good moment in the market, and they continuously keep making money.
Got it. So if there is someone who is, say, not very optimistic about the outlook and they are withdrawing their money from markets, perhaps profit booking after the last phenomenal 2 years that they've seen, where is it that they should
Right.
diversify their funds? Do you like gold, silver, or maybe debt, considering that interest rates are rising?
Yeah, I think see, debt could really make sense. I mean, as of now, but then you can't really be putting all your equity money into debt. But at least for the time being,
Agree, but like
I think
what proportion of profits they're booking out, it wouldn't make sense.
no, I mean, see, typically I would say in a portfolio, uh, I mean, if
Hmm.
you have, say, for 50 to 60% equity, that's what I mean, I typically suggest for a normal investor, say 35-year-old. I would
Hmm.
surely suggest 50 to 60% in equity, say about 30, 25 to 30% in debt. And this could be the right time, possibly, to invest in debt over the next 3 months. I'm not saying put everything together to now, but over the next 3 months, say up to March, April. Because beyond that, I don't see. I mean, like I said, not too many rate hikes, and
Hmm.
we could possibly hold on at those higher levels. And over the next 18 to 24 months, we could see the interest rates again starting to come down. So one, you're locking in at a higher yield, and when the rates start coming down, you will have capital gains at that point of time because the bond prices will move up when the rates come down. So over the next 24 months, I'm sure, I mean, whatever debt instruments you're putting in now will give you extremely good yields.
Got it. So about 50 to 60% exposure in equities and 25 percent odd in debt is what Amrish is suggesting
Yes, yes,
uh,
and
as a rule
and
of thumb.
possibly when you talk of gold, yes, I think
Hmm.
I mean gold also has consolidated well, and possibly
Mhm.
it's on its way up again. So gold typically I suggest about 5%. Someone who's really bullish on gold, I would say, I mean, go up to 10%, not beyond that in your portfolio.
Got it.
Because again, gold,
Amrish,
when we talk of gold, here 5 to 10% is only from an investment perspective, because most of us Indians already
okay,
have exposure to gold, whether we are investors or not.
true. Uh, Amrish, everyone's talking about agri these days. Obviously, ahead of the run up, there's always chatter around agri stocks, but it is a very cyclical industry, dependent on rains. There's constant government influence. Do you happen to like this space from a long term perspective? And within agri, any particular themes which you prefer?
See, from a short term perspective, clearly it's the fertilizer theme which will play out because from a budget perspective. But
Hmm.
I would prefer to invest from a longer term perspective into agrochem. I mean, companies like UPL. which is what I've been suggesting also to my investors. Someone who possibly is not just an India player, is a global player. So that's the sort of because if you're talking of the next possibly 2 to 3 decades or more, clearly food security is going to be one of the major challenges, and this theme will actually play out well, in which agrochem player will be a major contributor. So a company like UPL having footprints across the globe is one which I would look to invest from a longer term perspective.
And it is one of the largest players worldwide as well. I think in the top five,
Absolutely.
top three, maybe.
Yeah. They are among the top five, and in a couple of verticals, if I'm not wrong, they are number one, number two.
Right. So that's a positive. They've also been working on reducing their debt after that mega billion-dollar acquisition that they had back in 2018. So that's again a figure that a lot of analysts on the street watch out for when it comes to UPS results.
Yeah, and there has been a consolidation. So I think
Hmm.
it'll take possibly a year more for all these things to play out. And the stock anyway hasn't moved up much. It's been holding on at the same level. So that's a good point to get in.
Got it. Uh, Ambrish, another area which has suddenly picked up is insurance. You know, it's back on everyone's radar. We did discuss about insurance a long time back that there is so much promise, and yet most of these insurance stocks haven't performed at all. We even had the LIC IPO, which did not perform to a lot of people's expectations. Do you like this space, and any top picks that you'd like to share?
See, what went wrong for insurance was the sort of claims which happened during COVID. Uh, Especially on health as well as life to a certain extent. But then post that, what we have seen in the last 18 months is that the premiums have moved up, and the claims have started coming down to a certain extent. So when that happens, clearly your margin moves up, and at the same time, all the insurance companies have a decent book on equity, which anyway has done extremely well. Keeping both these things in mind, look at the stock prices of most of the insurance companies. I would say nearly all of them, the way they have corrected, and especially the PSU ones. You talk of general insurance and New India. Now, last year, 2022, we saw the PSU banks performing. So when it comes to insurance, again, we may see the PSU insurance companies which were absolute pathetic underperformers in the last 2 3 years. I think they could, in fact, be on the radar of a lot of investors, and we have already seen these stocks outperforming to a certain extent in the last few days. So my pick in this space again would be the PSUs, but at the same time, a stock like HDFC Life and ICICI Lombard. I think these are the 4 5 stocks which I would have in my portfolio. When I say 4 5, it's GIC, New India, LIC for sure, because I clearly see this possibly crossing the IPO price and going to levels of about 1050, because I still believe that LIC IPO was at a very decent valuation, and
Mhm.
I never really expected it to fall to those levels of 600, but then that was more due to the technical issues which were there, because whenever a IPO opens lower and stays lower for a while, there is a lot of selling which comes that, and for that stock to cross the IPO price becomes difficult. So it can move up to 900 quite easily. Beyond that, it'll take a while, but I still have a target of about 1050 for that stock. And like I said, in the private sector, I would prefer HDFC Life and ICICI Lombard.
Got it. And just to add to Amrish's point, I have this fun fact in front of me that only 10% of India's population invests in insurance. It has one of the lowest insurance penetration among developing economies. And over the next decade, the insurance industry overall is estimated to grow about 5x. to $520 billion. Obviously, we all know that the cost of healthcare in India is also very high. You're just one uh, hospital away from bankruptcy. So insurance perhaps has a long runway of growth, and we are now starting to see a lot of these names pick up in action. Amrish, IT stocks also are starting to form a bottom. Would you be interested in entering here? Maybe apply a buy on dip sort of a strategy, or would you wait this one out?
Uh, I mean, I would clearly have IT stocks on the radar, but I still see possibly another quarter or maximum of 2 quarters of pain. Because see, whenever there is a slowdown, which is what we've been expecting, so whenever there's a slowdown, I mean, you have the discretionary orders. I mean, reducing for the IT stocks, and
Hmm.
I expect. I mean, that sort of a talk from the managements when they talk to the investors and analysts post the earnings. I think we will hear a bit of that, of the orders slow down. And that, in fact, could spoil the sentiment for a while longer. And that's what I'm waiting for. I think one should start buying when that sort of announcement comes and the stocks correct a bit more. And I would still go in for some of the niche players, for example, a KPIT or a Tata Elxsi, because that's where I see a major alpha as compared to the larger players.
Got it. And Amrish, one of our listeners, Parth, has a question. He wants to know whether it is a good time to buy Nasdaq ETF.
See, I mean, I don't track, I mean, the Nasdaq very closely.
Mhm.
But then, I mean, looking at the sort of underperformance we have seen, if his view or the time frame is 15, 18 months plus, and he doesn't mind possibly averaging again at slightly lower levels, so then I think one could start buying at this point of time. But you require a bit of patience.
Got it. Parth, I hope you are listening and we've addressed your question over here. Amrish, I've saved the best for the last, and that is banks. Across the board, we're seeing really good action. Recent Q3 updates by some smaller private banks also further strengthens the case for a solid credit cycle growth. How would you play this theme? What will be the mix of private and PSU banks? And what is your top pick basically from the space?
In fact, I've been extremely bullish on the banking space for the last 2 years plus, and especially in the PSU space, because I mean, my style of investing. I mean, from whatever I spoke in the last few minutes, I think it will be clear that my style of investing is contra, and I don't mind waiting. So, I mean, I was suggesting a larger quantum of PSU banks,
Hmm.
and I mean, that tested our operations for about 18 months plus. But then last, I mean, 4 5 months, we have seen extremely good returns from there. I mean, the reason why I had suggested PSU banks, it was not only because of underperformance, but then last 4 years they have been cleaning up the balance sheet. And I mean, if one has observed the working of PSU banks in the last decade, or especially I would say from 2015-16 onwards, is that they were afraid to lend. But now, post this cleaning of the balance sheet, even the credit growth was expected to be extremely good for the PSU banks. And that was one of the reasons why I had suggested people to buy PSU banks. And that came out in the last couple of months. I mean, those stories started coming out. And the performance also we have seen had improved substantially for all the PSU banks. But I think as of now, it's more or less played out. Quite a few of these stocks have given you 60, 80% return. Some of them have given you more than 2x. So
Right.
at this point of time, I feel that the PSU banks are more or less fully priced, but momentum being there in the market, whenever there is a bounce back in the market, we see the PSU banks outperforming. But I think it's a good time to book out to a very large extent and hold back, don't invest back into PSU banks because I believe with the interest rates which have already gone up, uh, the margins may not be as good as what we would have earlier envisaged. So there will be there will not be too many positive surprises. Everything has already been priced in. So when it comes to banks, I would prefer to hold on to a couple of private sector banks. For example, something like a Kotak, Axis, or even ICICI Bank, and IDFC first from a slightly longer term perspective because we are, I mean, we are yet to see the best of IDFC first, but that's slightly on the riskier side. Other than that, I mean, I won't have too many other banks in my portfolio. Surely not PSU because I've made my profits. I'm booking out.
Understood. And any view on the NBFC space, particularly Bajaj Finance, considering it had its worst years since 2008? The stock was down about 6 odd percent in 2022 versus a 9.5% gain for the
Yeah.
Nifty Financial Services Index during the same period.
See, Bajaj Finance, I think the best is behind them. Uh, I mean, if you look at the history,
Mhm.
they came from nowhere. Then I mean, they were actually the sort of disruptors in this space in, say, 2014, 15, 16, even up to 18. And the reason why they did extremely well was that the PSU banks were completely out. They had their own problems, and they were not there in the market. Uh, so all those, I mean, locations or areas or people who were underserved, I think Bajaj Finance filled that up, and because of which they did extremely well in those years. Now going ahead, the PSU banks are back in business, and at the same time, going. I mean, if you talk of the next 2 3 years, I see Geo Finance, the finance.
Um, Amrish, I think you have dropped off again.
Uh,
There's
I mean,
Yeah, you're
yeah.
back on.
Okay. I don't know where I you missed me out, but
You were talking about
let me just repeat.
the last I heard you say is Bajaj Finance.
Okay. So anyway, let me repeat the whole thing again. Bajaj Finance did
All right.
extremely well, like in the last 10 years. Basically, because the PSU banks were just not there in that space because of the sort of issues which the PSU banks were facing as far as NPAs are concerned and whatever the other issues were there.
Right.
And they in fact became the disruptors in this space. Now, going ahead, what I see is that PSU banks are back in business, and the bigger disruptor, just like what Bajaj Finance did, maybe a bigger disruptor, compared to them, would be the Reliance arm, Geo Finance. So,
Mhm.
with all this now coming up for Bajaj, I don't think they will, get that premium valuations which they got in the past. There'll be huge competition for them. So I think it's time even now to to book out. If you're sitting on a good profit, book out of Bajaj Finance. The best is behind them.
And any other NBFC that you perhaps like?
No, I mean at this point of time, I feel
Oh,
most of the NBFCs are quite expensive. I'll not buy into any of the NBFCs, whether it's gold or others. Even housing finance, I think I'll only stay with HDFC. So nothing else in NBFCs.
got it. Amrish, usually, during uncertain times, people tend to look towards defensive stocks, and FMCG is one such sector. But I was just going through one of the reports that in December, FMCG sales were in fact down 6%, and rural demand continues to lag. What do you make of this, and are FMCG stocks can avoid?
Again, if you're talking of possibly the next 1 or 2 years, FMCG could bounce back because rural demand should, in fact, bounce back decently well going ahead. So, from that point of view, one can possibly look at buying FMCG from a short to medium term perspective. But if you're talking of longer term, again, let me
Hmm.
talk of Reliance and Reliance Retail. That will be the next big disruptor in the FMCG space. From the sort of
Hmm.
ammunition which they are building up as of now, I think that should play out in the next couple of years. Because see, for FMCG, the biggest connectors in that pipe from production to the market shelf are the distributors, FMCG distributors, which is an unknown, unseen face in this whole game. Reliance Retail is disrupting out there. I mean, like on this, possibly we can talk for a much longer time. That's a different subject altogether. But in short, I
Yeah.
see Reliance Retail disrupting the space, and FMCG players will be badly hurt. So, if you're talking of longer term, in the next sort of a run, time to possibly book out of FMCG.
But Amrish, just playing devil's advocate over here, we had this similar sort of a scare, or this potential disruptor when Patanjali broke onto the scene. I remember there was one report way back in 2017 in one of the annual reports where AQL mentioned Patanjali, like, I don't know, some 100 times or something. Uh, but we still overcame that phase. Do you still think that FMCG would be in trouble from this whole Reliance retail thing?
No, no. See, Patanjali was a competitor
Mhm.
in. I mean, as far as FMCG players are concerned, it was a competitor. They brought in a new sort of a vertical, which is more of the natural Ayurvedic healthy, and others also fell in place. I mean, you look at every other FMCG player, they brought in a brand to counter Patanjali. But what Reliance is doing is, no, Reliance is not going to be a competitor. They are just snapping the umbilical cord which is required for the FMCG players, the distributors. The way I
Mhm.
see it is the distributors will be finished by Reliance. So
Okay.
Reliance
So it's
is
more of
not
a
competition.
middleman game instead of the product innovation.
They no, I mean they are changing the complete face of FMCG distribution in India, where the current FMCG players I think will be left high and dry.
All right, got it. Uh, Amrish, in the last 2 months, we've had close to 20 IPOs. Do you happen to like any of these recently listed companies? Maybe like a BKG Food, Five Star Finance, Global Health. Radiant Cash, which got listed today. It barely got subscribed. That to cut down the issue size, and somehow managed to go through it. And that one was up about 12%. Do you like any of the recently listed companies? Perhaps anyone from the entirety of 2022.
See, again, Radiant, when you talk about, I mean, there's absolutely no logic as to why the stock should have quoted at a premium, other than the fact that possibly there were hardly any sellers because no one really applied for it. So, I mean, if you look at the valuations and compare it with the closest competition, which is AGS Transact,
Mhm.
which had come out in the IPO at 175 rupees, I think January last year, and today it's quoting at about 65 or 66. Compared to that, Radiant is just too expensive. I mean, you're getting a AGS at what, less than 10x
Mhm.
FI23 multiple. Hmm. Because see, most of these IPOs which have come where basically apply and sell on listing, but that also story, I mean, that game also did not really play off well for quite a few of them lately in the main board IPOs. But then, if you look at the SME IPOs, I think that is where the action was. I'll just give you some statistics. In
Hmm.
2022, there were more than 100 SME IPOs which came out,
Wow.
100 plus, and 30% of those gave you multi-bagger returns. When I say multi-baggers, it is 100% plus. So 2x to
Okay.
8x, nearly 30% of the stocks or the IPOs give you that sort of a return. About I think 50 to 60% um, uh, gave you returns of anything between 20% to 80%, and the balance opened below par. So the big action was there in the SME space, but that big action is only for the retail or a HNI investor, because in the SME exchange you hardly have institutional investors participating. But even that game got over in the last 2 to 3 months, because each of those IPOs started getting oversubscribed hundreds of times. I mean, recently there was one IPO which I think got oversubscribed 800 times on the uh, HNI part of it. So your allotments have been constricted.
Dronacharya,
But no, yeah,
I guess.
Dronacharya was clearly one of them, which
Huh.
which got that sort of a investment. Then there was something called Anlon Technology, which came on 29th and closed on I think 2nd of Jan. It was what close to 883 times. So
My
getting
God.
allotments is difficult, but those who had invested from January to say about August September really minted money on SME exchange, because oversubscription rates were also not too high. But then, if you ask me, will you invest in these SME stocks from a longer term perspective? Out of the 100 IPOs which came out, I may possibly choose 4 or 5 maximum, because most of the others I just don't understand. I mean, their business model or the story. So it was basically apply and sell on listing.
Got it. Just some stats I'm reading on Anlon Technologies, like Ambrish said. The IPO size is about 15 crores. It was total oversubscribed 428.6 times, almost 430 times. The HNI portion was 883 times, and the retail portion was 447 times oversubscribed. I think it's pointless for me to ask you, Ambish, how to apply for SME IPOs. I don't know for one, and I'm sure a lot of people would be hearing you and the kind of returns that you talked about. 30% of the IPOs giving multi-bagger returns would be interested to know. But just for the information purposes, can you share how someone can apply even those 4 5 SME IPOs in 2023?
See, no, see, I mean, the way to apply is the same way you apply for the main board IPOs. I mean, if you can download the form and submit at your, I mean, with your bank, ASPA banker, or you can apply directly from your internet banking. It's the same window. And I mean, how do you trade
Oh,
in the stocks? Again, the answer is the same. It's the same window. The way you trade
all
your
right.
normal stocks with your broker, it is exactly the same window. But issue is that people, I mean, haven't heard too much of about SME IPOs or the SME exchange, so people are unaware.
Hmm.
But the method is the same.
Okay, maybe that's something for us all to explore with our brokers and find out how this thing works. Amrish, while we're talking, we also have one more question from the audience. Gandhi Pragada wants to know your view on the green hydrogen incentive that was announced by the Indian government, some 18,000 crores layout. How do you think it will impact? Which are the stocks which may gain from this, RIL and L&T in particular?
L&T, I don't know how much it will help as such, but then clearly, I think, I mean, these announcements are basically for some of the large groups, and especially when we talk of large groups, I would like to name them. Uh,
Hmm.
but at the same time, it would be for the unlisted stocks in those larger groups. So from a market perspective, for a investor, I don't think there's anything much for them in these announcements.
Got it. Amrish, do you,
Because yeah, because
yeah,
I mean,
yeah,
let me
please go ahead.
again go back to another announcement which came, semiconductors.
Mhm.
Again, if you look deeper into it, none of those larger groups we were talking of who have shown interest, none of their listed entities would be getting into semiconductors. Again, it would be unlisted ones, they're privately held ones.
Yeah, and even Vedanta did that. They created a separate
Exactly.
subsidiary
I mean,
away from the listed
yeah, yeah.
entity
I,
for the
I,
semiconductor.
I didn't want to name the groups, but yes, you got it right.
Yeah. Uh, since we are on Vedanta any which ways, Ambrish, I wanted to ask you about metals. China reopening is another positive. Dollar index is also another positive for metal stocks. We saw some bit of profit booking today and yesterday, but generally speaking, the Nifty Metals Index is at an all-time high. Uh, do you believe that this is a good time to buy any of these metal stocks or stay away from them?
No, I don't. I think one should stay away. The metal index being at an all-time high possibly is an opportunity for those who missed the last move to exit. I think it's again giving them an opportunity to exit now at these levels, because metals overall, in fact, I see a further correction, because if you look at the prices, I'm talking about metal prices. Uh, I mean, people had talked of a multi-decade sort of a run when they started moving up in 2021. But then this is again a normal cycle. It is not a super cycle, it's a normal cycle. And we have already started, seeing the correction as far as the metal prices are concerned. I think that will continue. So as long as that continues, I really don't see the stocks making new highs. So now, because of sentimental reasons, we have seen the stocks move up. Utilize this move.
Got it. Ambrish, there's one very stock specific question. I'm not sure if you want to answer it, but Sandeep wants to know your view on Poonawalla FinCorp.
No, in fact, I don't track that stock very closely, so it's a bit difficult for me to give a view. But like I
Got it.
said,
Hmm.
NBFCs overall, I would prefer to stay light.
Got it. Amish, again, there's a lot of news with respect to consolidation in the cement space. Orient Cement bounced up 5%. There are reports that the Adani Group is in talks to acquire the promoter stake.
Right.
How do you look at perhaps the entire construction and infra space? Again, like agri, it's very budget oriented, maybe a short term play, but do you like it even from a long term perspective? And what all stocks do you perhaps prefer?
No, see, in the cement space, from a long-term perspective, I would prefer to, be in a stock like Ultratech or a Shree Cement, which again has underperformed a bit in the recent past. I would still, although the Adani Group cement stocks may give you an excellent return, but I would prefer to stay away from those Adani Group stocks for the time being. But as far as the cement space is concerned, I would prefer to be in Ultratech and Shree Cement.
And from the larger infrastructure pack.
See, from the larger infrastructure pack, clearly, L&T would be one of those picks, which is evergreen sort of a stock for me, which
Mhm.
anyway I've been holding it. Holding on for the last couple of decades, and will possibly, hold on for the foreseeable next decade, unless unless there's a major accident as far as L&T is concerned. So that's one stock which I'll hold on.
Amrish, if you don't mind me, which is that one stock that you've held for the longest period of time? You might not hold it right now, but did for the longest period of
A couple of them are there. L&T, like I
Sure.
mentioned, Asian
Mhm.
Paints has been there with me for long. I've been holding on to ITC again, FMCG player. Again, I bought more when there were a lot of memes on ITC about a year and a half back. I mean, that was a very good opportunity to buy into ITC again. So these are a couple of them which have been there. Maybe if you want to know which is the one where I made the maximum, uh, that's one stock called Praj Industries. I mean, I keep mentioning about this because I made about 400x in this stock. Uh, I mean, I had bought this in 2002 at 5 rupees, and I booked at closer to over 2000 in about 4 years, 4 to 5 years. I think
Wow.
the I
Yeah,
think the I think the
I
only mistake.
remember that conversation. Yeah.
Yeah, I think the only mistake I did was not really buy. I mean, as much as I could, I stopped somewhere in between because
Mhm.
I mean, when a 5 rupee stock becomes a 25 rupee stock and it becomes 5x, the psychology plays in and stops you from buying more, despite the fact that you are quite bullish on it fundamentally.
Wow, that's insane. And I do remember, Amrish, this conversation that we had about Praj Industries. We were talking about how you mentioned about Praj to uh, the late Big Bull, and how he ended up making even more money because of his conviction in the stock.
Exactly. I mean, he bought it 100, so he bought it 20x, and still he made 20x on that.
Wow, that's some return on a stock. I know a lot of people would be like, which is that one stock that could give them also such kind of returns? Just crystal ball gazing. I mean, any stock, any one stock that you think
See, see,
by
see,
2050
see,
would be.
see. I mean, see, like always, it's quite difficult to when you identify a stock and say that this is the next multi-bagger. It becomes a multi-bagger, and then you look back and say, yes, I mean, I got it right. But one stock which I think should do extremely well is Mahindra Holidays, because I like the model on which they work. Uh, I mean, to explain the model, basically they take upfront fees from the members. So if you become a Mahindra Holiday member, you are paying about 4 lakhs to 7, 8 lakhs or slightly more now for a 1 week holiday for the next 25 years. Now, I mean, every room which they construct has 52 weeks because they are selling in weeks.
Hmm.
So out of 52 weeks, 2 weeks is meant for maintenance. So they sell 50 weeks. Now, on average, if they are charging 5 lakhs per week per room, so for in 50 weeks, it's about 2.5 crores is what they collect. And if you go by the thumb rule of constructing a hotel, a room cost is not typically more than 1 crore for a hotel or a resort of Mahindra standards, because Mahindra standard is not 5 star; it is somewhere closer to 4 star. So you're spending 1 crore, you're collecting 2.5 crores. So 1.5 crores remains on your balance sheet. Now, I mean, after that, every year you are collecting maintenance charges. I mean, people
Hmm.
pay anywhere between 15 to 20,000 or 25,000 as maintenance charges. So that takes care of all your maintenance cost. Now, when you have spent 5 lakhs uh, to buy a week for the next 25 years, you'll surely go and spend that 1 week in the resort. So when you go to spend that 1 week in the resort, your stay is covered, but not the other expenses, your um, food and other activities. So that
Right.
is where again they make a good margin. So for the next 25 years, you have visibility on the business, you're secured, you have enough cash on your books, and the big trigger after 25 years is what we'll see now, because Mahindra Holidays was set up in 1997-98, and they started selling from around that time. So I mean, although initially they sold a few for 33 years, but later it was all 25 years. So now in the next 2 3 years, we will see that the initial set of members will be going out, and when they go out, they don't get anything. So your money is gone, and whatever you have paid is over, and there is no liability for giving a free holiday to those people from Mahindra Holidays. So what they do is they get a new set of investors. Now, when you're getting in a new set of investors, you are not again spending on the resort because the resort is there. So you have an asset which is free of cost, free of liabilities on your books. Plus, you are able to get a new set of investors. So that trigger will happen in the next 2 3 years maximum.
Mhm.
So from that point of view, I'm saying Mahindra Holidays is a great buy because this will keep continuing. I mean, every year they will have a couple of resorts now becoming free.
Wow. Amrish, we've completely run out of time on this Twitter Spaces session.
Yeah.
Once again, thank you so much for being so candid and open with all of your answers. We really appreciate all of this and sharing
Thanks.
all the awesome insights with our listeners. Uh, for all those who are probably tuning in late, this Spaces session is being recorded and it will be the first pinned post on our Twitter handle. So do not forget to follow us and check out the entire recording. There's tons of insights on several stocks as well as sectors that will be very helpful. And wishing you all a very happy new year. See you again next week.